Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today, as every weekend, I give you my weekly update on my real money portfolio for week 30 of 2021. And first of all, let's take a look at the overall performance of this portfolio since the start at the 2nd of December 2019. And since then, my portfolio have a performance of 64.85%, which is quite an outperformance of 24% to the S&P 500. And in this video today, I want to go through the following topics. First of all, the earnings season just go on and some of my companies released their Q2 earnings. I will go through this. Then through the transactions of last week, the received dividends, and then take a look at the performance overall. So let's start. But before we start, don't forget to subscribe to my channel, ring the notification bell to never miss another video, and then we will see once or twice a week and especially every weekend with an update on this real money portfolio. So please subscribe, ring the notification bell, give me a big thumbs up. This helps my little channel a lot. Thank you. So let's start with the Q2 earnings. And first of all, Pfizer reported their Q2 earnings last week, and the Pfizer Q2 earnings beat view up on COVID-19 vaccine. Pfizer reported a second quarter 2021 adjusted earnings per share of $1.07, which comprehensively beats the Zacks consensus estimate of 97 cents. Earnings rose 73% year over year. Revenues came in at 18.98 billion, which beat the Zacks consensus estimate of 17.54 billion. The sales rose 92% from the year ago quarter on a reported basis and 86% on an operational basis, mainly driven by sales of Pfizer and partner BioNTech COVID-19 vaccine. The vaccine contributed 7.8 billion in global sales in the quarter. Excluding revenues from the vaccine, sales grew 10%. When we look at the guidance, revenues are expected in the range of 78 billion to 80 billion compared with 70.5 billion to 72.5 billion previously. The revenue guidance includes approximately 33.5 billion in sales from the vaccine, much higher than 26 billion expected previously. Adjusted earnings per share guidance was raised to a range of $3.95 to $4.05 from the prior expectation of $3.55 to $3.65. So overall, very good numbers from Pfizer, beat the estimates, and of course driven by the vaccine. So very good numbers for Pfizer here, nothing to worry. And so after Pfizer published these earnings last week, the stock price jumped up and now came back a little bit to currently $42.81. And so my 116 shares of Pfizer with an average purchase price of $35.79 are up 27%. Second of all, MI Homes reported their Q2 numbers, and I made another video about that, go a little bit deeper into these numbers. You find the link here up on the screen if you are interested in more information about MI Homes. Just here, the highlights, the revenue increased 35% to 961 million, an all-time quarterly record. The net income of 107.6 million or $3.58 per share is an increase of 97% compared to 54.5 million in 2020. The shareholders' equity reached an all-time record of 1.5 billion, a 34% increase from a year ago, with a book value per share of $50, and the return on equity improved to 27%. So overall, this was really impressive numbers. Very, very good numbers from MI Homes. The company also announced that the board of directors has approved a 100 million share repurchase authorization, replacing its existing 50 million share repurchase authorization. Overall, the CEO said the demand for new homes continues to be very strong. So also the outlook seems very good. The stock price jumped up to now currently $64.71, and so my 110 shares are going back to the plus to a plus of 1.37% right now, which is not a lot, but this company is really good, and I will stick with it. I'm very confident in this company, and with prices around $60 or even under $60, I think I will also add more and more. For me, in my view, and I explained this a little bit more in my other video about MI Homes, the stock seems way undervalued. Then the giant Facebook also reported Q2 earnings last week. Facebook blows past estimates but warns growth will decorrelate in second half of year, say MarketWatch. The social media giant Facebook, which relies almost exclusively on advertising, said it earned $10.39 billion or $3.61 a share, topping forecasts of $3.04 a share, according to analysts polled by FactSet. Facebook sales catapult 56% to $29.08 billion, eclipsing estimates of $27.85 billion. So very good numbers, beat the estimates by a mile, so very good for Facebook. But then when you look at the outlook, then they say in the third and fourth quarters of 2021 we expect year-over-year total revenue growth rates to decorrelate significantly on a sequential basis as we lap periods of increasingly strong growth, Facebook Chief Financial Officer David Weiner said in a statement announcing the results. Currently, very good numbers. The guidance not so positive, still positive, but maybe not what the market expected. And so Facebook declined a little bit in the stock price. Because after Facebook released these Q2 earnings, the stock price just fall around 5%. To currently around $355. And so the market react on the guidance not that positive after we had a really good run from $250 in the last 6 months to in the peak $377. Then Imperial Oil, my Canadian oil company, also reported Q2 numbers, and Canada's Imperial Oil posts 7% fall in quarterly profit, Reuters reported. Canada's Imperial Oil reported a 7% fall in second quarter profit on Friday, impacted by planned turnaround activity and weaker realized margin in its downstream refining business. However, the company continued to post strong output from its largest asset, the Kearl Oil Sands mine in northern Alberta, which hit a new monthly production record in June. Calgary-based Imperial, which is a majority owned by ExxonMobil, said its net income fell to 366 million Canadian dollar or 50 Canadian cents per share in the second quarter ended June 30th from 392 million Canadian dollar or 53 Canadian cents per share in the previous quarter. Still good numbers from Imperial Oil, less than expected, and so also the stock price reacted to that. And so the stock price just fall to currently $27.38. And so my 156 shares of Imperial Oil with a purchase average price of $15.10 are now up 85.5%. And of course, with every oil company, everything belongs to the oil price. And here we have a long-term chart over the last 40 years of the oil price. And as I mentioned in other videos about Imperial Oil, my goal is to see when the oil price hit maybe the $80 mark, and then it's time for me to sell Imperial Oil. We will see if and when this happens, and of course I will inform you then. But that's a goal, and that could be a good average in this always up and down market in the oil market. Then take a look at my transactions of last week. And first of all, as almost every week it seems, I added 9 more shares of Tencent for $62.79. And so now I have 110 shares of Tencent with the average purchase price of $72.86, which lead to a negative performance of 15.92% now. And of course, all of this have to do with the China crash. I made another video about that and just give you my opinion on the whole situation with the China stock market. Feel free to check this out. You find the link here up on the screen. Then Activision Blizzard. And I decided to sell Activision Blizzard last week because there are so many negativity, so many negative news over the last few months. There's a lawsuit filed and the employees are not very happy. Big internal problems, and it seems like the upper management of Activision Blizzard don't handle the things very good, try to just let go, and I don't like that. Of course, all the time there can be some negative things happen in a big company, but the way the management handles things and the communication is just not good, and this is not the first time with Activision Blizzard. And so I decided to sell my position because, as Warren Buffett said, you can't make a good deal with a bad person. So I don't know if the management of Activision is really bad, but with all the negative news over all these weeks and months, it seems like there's something going wrong, and I don't want to be part of that anymore. Even if Activision Blizzard overall, when you look at the numbers, when you look at the market position, their products, and so on, the innovation, it is a great company. This was a reason I bought into the company in the first place. But with all the surrounding, I don't want to be part of that anymore. And so I sold my position at the 28th of July for $86.83. Just took my profit. It was the smallest position in my whole portfolio, so it's overall also not a big deal. But as I said, for me, I'm just done with that. I don't like this communication overall. The trust was just destroyed at this moment. And then I added 4 more shares of Facebook for $356.30. As I told you before, Facebook reported overall currently very good numbers, beat the estimates. The outlook is not that positive, but overall the business model of Facebook just work. And so I added this 4 more shares, and now I have 12 shares of Facebook with a purchase price in average of $226.62, and the whole position is up 54.49%. And maybe you wonder, because at the end of August, at August 31st, I sold 6 shares of Facebook for $296.12, because for me at that time it seemed like Facebook was way overvalued. But after that, they just beat with every earning report the estimates, and so my calculated intrinsic value just jumped up to currently around $400. I just was waiting all the time for a pullback, and now with the reported numbers and the pullback of 5% to around $355, I just used this chance to add 4 more shares. Of course, in the hindsight, it was a mistake to sell in August last year, for sure. But shit happens. Whatever. I'm happy now. My position is a little bit bigger in Facebook. Still not a very big position in my portfolio, but at least a little bit more. And over the long term, I'm quite happy that with my average purchase price, I will be fine. Then take a look at the received dividends. And last week I only received my dividend from Scotiabank, or Bank of Nova Scotia, of $64.50. And so my whole position of 106 stocks of Bank of Nova Scotia is up 69.69%, which is quite nice. And here on the green dots you see when I bought my position, and mainly I bought my position last year in Q2 and Q3, a little bit here, a little bit there, and now Bank of Nova Scotia is one of my bigger positions in my portfolio overall, and I'm quite happy with that. I will just stick with this very great bank from Canada. Last but not least, take a look at the performance overall. And first of all, a view on all the stocks in my portfolio. Imperial Oil is my best performing stock right now with 85.5%, followed by Legend & Platt, Bank of Nova Scotia, JP Morgan, and so on. And only my two Chinese companies, Alibaba and Tencent, are in the minus. That's fine. I'm very happy with this whole portfolio. And if you're new to my channel, by the way, you find deeper analyses to all of these companies on my channel. Check this out. I put the link to the playlist of my portfolio here up on the screen. And when we look at the pie of my portfolio, then we see that Intel is still the biggest position in my portfolio, followed by Berkshire Hathaway, MI Homes, Alibaba, Tencent, and so on. I still also sit on a lot of cash with 26.54%. And the big reason for the big cash position is just it's so difficult to find good businesses for reasonable prices in this overall overvalued market. That's the reason for that. And of course, if we have a correction or a crash, then of course I will invest more in the current companies I have, or even in new companies. Just you have to find good businesses for reasonable prices, and that's very difficult right now. And just to make it complete, especially when you're new to my channel, here also a view on all the closed trades already. And you see I had a very good trade with Caterpillar, also with Walt Disney, Stamps, American Express, and so on. I just want to show you this if you're new to my channel, that it's just transparent how I come to my overall performance of 64.85% since the start at the 2nd of December 2019. And if you like this whole idea of long-term value investment and this transparency of my real money portfolio, then please follow me, give me a big thumbs up, subscribe to the channel, ring the notification bell to never miss another video, and then we will see the next time with the analysis of another stock. Thanks for watching today. See you then. Take care. Bye bye.